JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 30th of January 2023. So yep, welcome everyone. Welcome to this Monday's morning session and my last Monday's Traders Espresso with you guys. So welcome everyone. There will be another last one tomorrow, but tomorrow is the last one, and yeah guys, tune in for tomorrow as well. But before we go into tomorrow, let's go into today. And yeah guys, we'll have a look at the charts, the usual stuff, but before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So now then, guys, let's jump into the charts. So the first one I want to pick up here is Nikkei 225, and as always, the technical picture, the thing that I talked about last week, if you remember, I said that, hey, if we kind of continue to trade above this upside line, above all of these EMAs, then yep, there is still hope that we could go higher, but I would prefer actually to see a push above the 27,489 territory right here, just to be a little bit more on the safe side. Or if you wish, I mean, you could round it up towards the 27,500 level, just to have it, a nice beautiful number. Then yes, if we do break that up and we pop above it and we stay above it, then yes, I will go further north. In terms of the downside, I would say I will consider some moves lower if we do drop somewhere below this 27,165 territory, because at the same time we would already break the upside line and we could then fall below the below that 100-day EMA. Shanghai Composite. So after a week of kind of being away, Chinese market is now back on track, and it marked with a huge move, kind of huge gap, initial gap to the upside, and then look at this. This is one of those theories where you say that the gaps normally get filled eventually. However, let's say if we take a gap here, for example, back in September, mid-September, when we gapped to the downside, we drifted higher, we didn't really fill it, and we only filled it like right this year, basically in January and the end of January. So eventually, like I said, it got filled, but might take some time. For example, when you have like runaway gaps right here, like one here and another one here, then actually took a while to kind of fill it. Look, it seems like we know that we do have another gap here, but I don't know if we're going to class it as a fill here, but no, not really. Maybe there could be some more upside where we could eventually fill this gap here, but again, maybe it's already like time has passed, and let's move on and let's forget about that one, because normally it should fill like quicker. But of course, again, depends on the circumstances, that's obvious. But anyway, coming back to all this, I would say, looking at the picture here, I mean, we're still above the upside support line taken from the low of the 3rd of January, so it's still kind of, there is still hope that we could see a push back to the upside here, and because again, it's a very kind of straightforward approach here. Again, I do understand that if suddenly, let's say, the whole market is going to get fearful about the Fed again, then yes, I mean, we'll start dropping here. We'll, ignore any trend line here, and then just we'll slide, to the downside. But at this point, just as it is right now, let's see how this is going to play out. What I'm considering here is maybe, let's say, to see this index coming closer to this upside line, and maybe you're having a nice rebound and a push back up. Excuse me. However, if we do break this upside line and we fall below the 3,226 territory, I will consider a move to the downside. I can see in the chat room there, Robert Fuchs. Yep, I hope you'll come back. I love your show. Good luck. Thank you very much for the kind words. Really, really appreciate that. Honestly, you don't even imagine how much it means for me. So, really, yes. Thank you very much. Thank you very much. I hope, like I said, hope the rest of you guys also like the show. Well, trying to do my best, but yeah. But anyway. Thank you once again. Really, really, really appreciate that. Really appreciate the kind words. So, coming back to the market now, quickly on Hong Kong Hang Seng. Yes, coming back to below this hurdle. Okay, this is where I think I'll get rid of this. Yeah. So. What I just wanted to say that, look, from the start of the year, we made kind of a gain of around 15-16%, so that's not bad. Now we're retracing a little bit, and look. In terms of the downside, now we're dropping back below this key resistance barrier. I talked about it, which is near the highest point of June and the highest point of April, and we're drifting back down below it. So look. At the moment, I'm aiming for this little hurdle here, this 21,950 territory, approximately around here. If it provides a hold up, maybe we could see a rebound. If we break below it, I will go towards a larger correction to the downside, towards this 21-day EMA and this upside support line. Pretty straightforward with that. Now, Dow Jones Industrial. Oh, and by the way, in terms of the upside, if you're really not comfortable with all this right now, just leave it. Honestly, it will present itself with a nice opportunity. If you're looking for some higher levels, then I will start, although maybe this area got violated, I will actually keep an eye on it. This 22,450, 22,524. I will keep an eye on it. If we clear it, I will start aiming higher. Of course. So we do have the current highest point of January to watch out here, but this 22,700. But that could just act as a better kind of indication here, for your upside. If we clear that one, then yes, this will confirm a forthcoming higher high. Now, Dow Jones Industrial Average, very quickly, that guys, and I want to go through a lot of instruments here, so apologies, I'll probably fly through all of that. But yeah, in general. I would say this week is quite an interesting one because we do have, if I'm not mistaken, let me just quickly double check that. Yes, FOMC Fed interest rate decision, guys. So FOMC statement, that's on Friday. Everybody's going to be watching that carefully. So you do that as well, guys. I mean, because again, let's see how this market is going to play out. Maybe. If we start kind of declining, let's say up until Wednesday, if we start correcting back down, well, that maybe could give an indication that maybe the Fed won't be that harsh, and we'll see a rebound, and we'll see a market pushing back up. Like I said, I think that at the moment the interest rate expectation is, of course, for a rise of 25 by 25 basis points from 4.5 to 4.75. We do have the, yes, as I said, the FOMC statement as well. We do have a bunch of other data coming out, like the ISM manufacturing on the same day on Wednesday. That's going to be quite important to watch. Monday, to be honest, quite a quiet day. Yes, on Tuesday we do have the Chicago PMIs from the US. Canadian GDP numbers coming out. So for those who like to trade Canadian pairs, so keep that in mind. Yep, New Zealand coming out on the night between from Tuesday to Wednesday. I'm talking about European time. We have the employment numbers from from New Zealand. CPI preliminary numbers from Europe are coming out on Wednesday, guys. A bunch of stuff coming out this week. Check out the Islamic calendar. I'm not gonna just go right now through all of that, but of course the Fed stuff. Sorry, the employment New Zealand numbers coming out between Wednesday and Thursday. There we go. Mixed that up a little bit. But yeah, the FOMC guys. That's where everybody's going to be watching. Again, like I said, maybe we could see a bit of a retracement or something like that. Just kind of going, in the days before the interest rate decision. And if it comes out as expected, maybe we could see a push back up. But again, because we do have the FOMC press conference after that, half an hour after that. That's where the excitement could come. So just kind of be careful on that one. That everybody will be watching that. Listening to the tone of Jerome Powell. Anyway, guys, coming back to the technical picture here, the Dow Jones Industrial Average. Look, we reached one of the trend lines. I talked about it. Mission accomplished. Good. 33,782 got violated. So this barrier right here, we went higher. Look, I talked about this, and I said that if we're gonna break through this, I'm gonna aim for these two trend lines. And so far, we're kind of holding to the steeper one. Okay, that's fine. Look, if I want to go higher, probably at this point, the easier option is to kind of wait for a breakthrough this one, the slightly flatter one. I mean, because I just want to give it a little bit more room. If we do clear it, yes, I'll go towards the highest points of December, highest point of December here near the what's that level? 34,712, approximately around there. And then we'll take it from there. If it clears it, yes, go higher. If for the for the downside, I would like to see actually a drop through this upside support line. I do understand that we could be missing out on a bit of territory here, but how you can play this one out, for example, if you do want to trade something inside here, then probably the drop below the 33,782 territory, this one that I previously looked at as a barrier, as a resistance barrier, now you can take a look at it as support, and then yes, we could go from there. We could see that maybe correction here towards this upside line, but as I said, I will get more comfortable with the downside if we do drop below this upside line. S&P 500 very quickly on this one. So mission accomplished on this one as well. On Friday, yep, we reached my target. My target was this whole highlighted zone. Okay, that's good. Okay, we had a level here, the 4,101. Look, I talked about it, but we just came very shy by hitting by just a few points, by a few points here. Look, these things you have to take it. I mean, that's fine. You never get your ideal hit. So yeah, be careful. I mean, when you're targeting something, aiming for something. So just kind of keep that in mind. But yeah, for now, I would say my next step is to keep an eye on it. Just if we do clear this 4,101 territory, yes, I'll go higher. We do have some other obstacles here on the way, but I think I need to lower down this arrow a little bit here. That's going to be my target, the 4,200 zone. Not the level specifically, but the zone. So yep, but only if we clear this highlighted territory. For now, we could see a bit of a retracement. I think this level has to go, no longer needed. I think that maybe for the downside, look, I'll remove this arrow here. Park it here. For the downside, I think maybe you could keep an eye on, from the shorter term perspective, of course, 4,039 territory, approximately around here, could be a nice area. But I think maybe we could also actually look at the low of Friday, 4,048, just for that extra confirmation. Let me just double check the cash index. Okay, we are currently resting on this area. So, okay, this is going to be tricky. In that case, then probably I will stick to this little area here. Yeah, I think this 4,039 could be an interesting one. Look, at the moment, what you can do is 4,048, 49 zone. Keep your eyes on it, of course. If we do continue to trade somehow above it, then yes, there is hope. You know, we could see maybe a push up. But if we start dropping and we stay below the 4,048 territory right here, then well, I will consider a bit of a correction here towards this upside support line taken from the low of the 6th of January. Nasdaq 100 very quickly, guys. I think I need to speed up this my process here because I still have a bunch of instruments to go through. Look, Nasdaq, beautiful hit. Perfect touch, 12,166. Managed to reach that. Good hold up and fantastic hold up near this 200-day EMA. Mission accomplished because this was my target, initial target, and I said that if we break this downside line, I will aim higher, but only up until here. And look at this perfect hit. Beautiful. Now what's next? We are, of course, on the cash index. We're right now seeing a bit of a retracement. So that's fine. That's okay. And to be honest, anything up until this up to this upside line, and actually also I will actually allow it, even if we break this upside line, I will allow some moves here towards this downside line. If we do rebound, this is going to be the last resort for the bulls. If we do rebound from this downside line, great, we could go back up. However, if we do start falling below this 11,550 territory, I will go lower, guys. The German index DAX, still stuck here, so not really doing much. So guys, I mean, again, probably also watching, waiting for some data. I kind of have this feeling that this will make a move, after the Fed. So yeah, let's see if that's the case. Again, on Monday we don't have anything. On Tuesday, let me just quickly double check what could drive the market here. Okay, we have the German unemployment numbers. Okay, so that's interesting. But apart from that, not really. No, European preliminary GDP numbers and the German CPI figures. Okay, so look, it's a tricky one. I don't know if that's going to drive the DAX here too much, but anyway. Look, long story short, I'm still watching these two levels. The same analysis is valid. I need to see a clear breakthrough one of these barriers in order to consider a move like either higher or lower, at least in the near term. So watching for the downside, I'm watching this 14,906. For the upside, 15,269. Gold. Okay, gold, it's an interesting one. Look, we had a correction at the end of last week, so that's okay, that's good. I think that, I think now it's leaning a little bit more towards the downside. Look, I talked about this. I said that, hey, if we drop below this hurdle here, this 1920 zone, yes, I will consider a move lower. But we can see that on Thursday, on Friday, we also dropped, but we didn't stay below it. So we need see that kind of commodity staying below this hurdle, and then we could consider a move towards that 1900 level, 1896, something like that, or this 21-day EMA, or maybe even this upside support line. But again, a confirmation break is needed. Now for the upside, if it starts pushing above this 1937 zone, that's where, yes, I will start slowly aiming to the upside. Why? Because again, we do have this obstacle, this 1949, which is the current highest point of January. And if we clear that one, then yes, this will confirm a forthcoming higher high. More buyers could join in, and off we go towards that 2000 level. But a confirmation break is still needed. So at the moment, I'm just observing it. Silver, very quickly on silver. Look, I'm not going to spend too much time on this one. Just I wanted to quickly recap that we have a downside line. We're holding to it. We are currently ranging from the shorter term perspective here from around the end of December. So just waiting. Honestly, just waiting for it to kind of make a move. For the upside, it needs to push above this downside line and push above the 24.54 level. Break of it would confirm a forthcoming higher high. Let me just put an arrow here. And for the downside, obviously this 22.76. Now the only problem I have with that one is because if we do break this area, I will kind of aim for this little hurdle, because again, I think that the EMAs could approach this. Okay, however, look, I mean, another thing is if we do trade for now here, but then let's say these two EMAs start approaching this hurdle, this 22.76, now maybe then everything could, all the stars could line up and we could see a break here to the downside. But again, then it would be a perfect move all below all of the EMAs, and then more sellers could join in. So if you're a seller, probably better to wait until we get here somewhere. US oil, WTI oil. And look at this. Once again, the highlighted zone here holds this 82 territory, is providing that good resistance, and we're drifting back to the downside. There we go, guys. So, what's next? Well, I'm watching this 21-day EMA together with that 78.58 level. Now, if we do drop somewhere below this, then yes, we'll consider a bit of a move to the downside towards this upside support line taken from the low of the 9th of December. This could be a nice target. However, if it breaks, then yes, further declines are possible. That's obvious. But at this point in time, look, I'm watching this very carefully because why? Because I don't want to see this becoming a range of some sort. Let's say it's gonna, it's gonna tease us near around this 78.58. We're gonna rebound, push back up. Then we're gonna get another hold up here near the 82 territory. But maybe no, then we could see that pop later on. But again, at this point, I don't like ranges, and that's why probably kind of very careful and cautious. Well, actually, I'm careful and cautious all the time, but in this one right now specifically because, look, I mean, I want to see if this is not going to end up being a range or something like that. But if we do drop below this 78.58, then yes, I will aim for this upside. The DXY, the dollar index, I'll aim for this upside line. Sorry, I didn't finish the word. Upside line. I'll aim for if we do break below this hurdle, the 78.58, and we stay below it, I'll aim for this upside support line. DXY, the dollar index. So, okay. Still watching this. Look, we did kind of come very close near this 101.30 zone. Look, I'll take that. I think that this is a good result. I think I need to I was kind of hoping to see a better move towards it, but hey, you can't get everything, right? Right now at this point, I'm watching this downside line. I want to see if it's gonna get a break or not. If we're gonna, because we're currently retracing. Okay, so to be honest, I'm kind of maybe hoping to see a push higher, maybe a test of that 21-day EMA together with this downside line. But either way, I mean, still at the moment, the direction is to the downside. The trend is to the downside. So we're just not really making a lower low for now. I'll get more excited with the downside if we do drop below this 101.30. At the moment, I'm just observing the price action. For the upside, I need to see a break, at least a break of this downside line, not to mention this 103.45 level that I'm watching. But again, I will start looking at the upside if we do break this downside line and this 21-day EMA. Litecoin, very quickly on Litecoin. Popped nicely on Sunday. Look at this beautiful one. I mean, honestly, Litecoin is becoming one of my favorite ones. Not that I'm endorsing it to buy or anything like that. The reason why I'm saying my favorite one is just because it's it acts like a currency pair. So that's what's interesting. That's what I like. And it acts like some sort of a GBP JPY or something like that, or GBP NZD. But anyway, looking at the picture here, I mean, I would say I would like to see this staying above this 94.11 territory. So, or even better, I think, what I'm going to do here is I'm going to mark this little high that we broke, this 93.18. I'll give it a little bit of room. If we stay above it, great. I'll continue aiming to the upside. My next target is the 100, of course, the psychological 100 level, and then the 107.24. If we start falling back below the 93.18, I will take a cautious approach, because then we need to be careful with this little upside line. If we break it, we could also drop below the 21-day EMA. It could lead to a larger correction here to the downside. AUD USD, finally, to the pairs. Look, beautiful hold up here. Honestly, like the 0.7137 is playing out fantastically. I talked about this. This was my initial target. We reached it, and then we're now drifting back down. Now, the 0.7063 is the one that I'm watching, because if we do start falling below it, then there is a hope maybe we could see a correction to the downside towards this upside line taken from the low the 6th of January, and then we could take it from there. The only thing is that if we break this upside line, yes, I will consider a larger correction again, because look, any move lower right now, I think up until this upside line, tentative upside support line taken from the low the 13th of October, any move lower, I will class as a temporary correction before another possible leg of buying, because we have a bunch of these upside lines, again, all tentative, not, don't really maybe focus on it too much, but still I'm keeping an eye on it, because some of them do work out, some of them do provide some sort of a hold up, a temporary hold up, and then we could see maybe a better breakout or something like that. Now, either way, if you're a bull, probably that doesn't apply to you, because what you're doing here is you're waiting for a push somewhere above this 0.7137 territory. If we get that, then yes, I will go to the upside. AUD NZD, correction to the downside, guys, and there we go. So, we fell back below this 1.0940. Again, it's not the end of the world, but why? Because we are approaching the 200-day EMA, which could, and the 100-day EMA, which could provide support, and we could rebound from them. And another thing here as well, maybe this little thing here is forming a little bullish flag. We have our pole and we have our little correction. So hey, could that be the case? Of course, that could be the case. That could be a bullish flag, but again, a confirmation break is needed, at least above the 1.0985 here. That's going to be my safe option, because a break above that barrier would confirm a forthcoming higher high. If you're more enthusiastic than me on this one, then keep your eyes on the EMAs. Maybe we could see a nice rebound here. However, if we start clearing the EMAs, the 100 and the 200, then you need to go and aim for this upside support line at least. USD JPY. Okay, this one's interesting. It seems like it's also waiting for a kind of I think the Fed, but again, let's see how that's going to play out. Look, I think that at the moment, yes, we are kind of violating this downside line, and I think it will be better to actually remove it, because this is okay. All of these trend lines are tentative, guys. I mean, they're all subjective. They're not really like some sort of a thing to purely rely on. So look, if this one's, let's say it stops working, you have to draw something else. And what I'm thinking right now to draw here is, I think that I will mark this instead of that other one, because this is a little bit more flat and has a little bit more room, and kind of is a little bit more in line with the whole kind of calendar, economic calendar. So for example, I'll give it a few days. It could bounce around here until Wednesday, when the Fed comes out, and then we could see that explosion, unless the move will happen earlier, and then the Fed will just kind of stir a little bit more, and then we'll have a nice choppy session here, a nice choppy volatile session where some opportunities could come in. But anyway, as always I say, guys, wait for the news to come out. Don't try to improvise before that, because again, it could easily go up not in your way, let's put it this way. So at this point, look, with the USD JPY, keeping an eye on this 129 territory. If we drop and stay below it, I will slowly aim to the downside, but again, due to the events this week. Just be very careful. Let's say if we do start dropping below this 129 territory, yes, this could be an indication for the downside, but don't forget that on Wednesday we have the Fed. So if, let's say, if it starts slowly grinding lower here, maybe, the Fed could steer it up a little bit and we could then see an explosion here to the upside. Or if we start breaking the current lowest point of January near the 127.22, now this is where more sellers could join in. For the upside, 131.11, that's what I'm watching carefully here, still watching that, and then yeah, if we break that, I will go to the upside. USD CHF, also watching this carefully. We're in a falling channel right now still, and again, look, I'm personally, I would like to be a little bit more positive on this one. I would like to see this one popping nicely to the upside. However, again, the market doesn't always do what I want it to do, so I think that I will just adjust my strategy here, and basically I'll keep an eye on this 0.9280 territory, approximately around here. If we pop through it, then yes, I will go to the upside, because we would all at the same time we would pop through the upper side of the falling channel. And my theory with these structures here is, and I think I've mentioned that before already, that whenever we have a sharp decline and then we have a gradual decline in a form of a channel of some sort, or maybe even better, a falling wedge, yes, a breakout to the upside happens, but always we have the EMAs that kind of go in the way here. So we have that pop, for example, we go higher, it hits the 100 or the 200-day EMA and reverses back to the downside. We have seen that, guys. If you stuck with me with my videos previously, you have seen that happening, and I've explained that a lot. And this idea kind of is for now is working. Again, there's always that one moment that stops working, so try just kind of keep it simple, just go with what you have. Yeah, at this point, like I said, for the upside, I need to see a push through this upper side of the falling channel, and this is 0.9280 level. For the downside, I would like to see, ideally, of course, a drop somewhere below the 0.9087 territory, but again, I do understand we could be missing out on a bit of territory, so maybe this option could play out nicely. This little short-term tentative upside support line taken from the low of the 18th of January. USD CNH, offshore Chinese yuan, so against the dollar. So yep, here you can see a nice, beautiful technical hold up. This is one of those moments where it's working, the downside line is working, and the question here is, can we see a pop higher, for example? Well, we'll wait and see. Again, the Fed will do a lot, and I think that from the technical perspective, what you can do here is just wait for a push above this 6.80 zone, something around here, and then we could go to the upside. For the downside, a drop below the 6.69 zone right here could do the trick for a few more sellers, and because this would confirm a forthcoming lower low. So this is quite an interesting one. If you do like to trade exotic pairs, then this one is one of them to watch right now. GBP CHF, look, I talked about this last week. I'm just gonna stick to the same game plan. I'm watching this still. Look, I mean, it's coiling up perfectly. I mean, I need that confirmation breakout here at the moment. I'm just observing this. I'm both. I mean, although I'm cautiously bullish, still, I need a confirmation push above the 1.1430. For the downside, I need to see a break of this upside line, and then we could consider a move lower. GBP USD, again, 1.2444. I think that, again, it seems like it's waiting for the Fed. So, yeah, be careful. Again, I'm not saying that it's, this is when it's going to pop exactly or something, or do something. But it seems like that. So I think that I'm not going to be running the Traders Espresso no more, and then is going to make a move, something like that. So after Wednesday, or during Wednesday. But yeah, guys, look, either way, for the upside, I'm watching this 1.2444. For the downside, I need to see a drop below the 1.2126. And EURUSD, jumping into the euro pairs. So I talked about this last week, and I said that, hey, we reached my target, the 1.5259, rebounded from it. Now the question is, can we go again to the downside? Well, I will play it simple. I'll keep an eye on this 1.5259. A break of it would confirm a forthcoming lower low. For the upside, I would like to see a push back up to the 1.5445, but again, we do have the downside line, which could be a little bit in the way. However, if this downside line gets broken, then yes, I will go higher. And some of you might think that, hey, why not to draw it this way? And you would actually be right, because I think that it's better to draw it this way. And I think that this downside line, given that it's already a tentative one, let's keep it like, let's keep it right like that, simple. So for the upside, I'm keeping an eye on this 1.5445, and then I'll go from there. EURUSD, just a quick update, nothing special, just watching the range. It's near the lower side, so that means I'm kind of leaning a little bit more towards the downside, but again, I need to see a drop here first before before I could go lower. For the upside, I need to see a push above this 1.69 territory, or let's round it up to 70. I think that's easier. 1.70 zone. Keep your eyes on it. If we clear it and stay above it, I'll go higher. Euro JPY. Look, I talked about this idea of a broadening triangle pattern because it seems like could be forming something like a bullish, I want to say pennant, but it's more like a bullish flag, which is kind of a broadening triangle. So, if that's something we can consider, I will consider it. So at the moment, we're nicely sliding alongside this lower side of this broadening triangle. Can we rebound from it? Okay, great. I will go up, but still probably the easiest option for me to go higher is a break through this area, through this downside line, and through this barrier somewhere near this 142.85. And finally, EURUSD, guys. So also keeping a close eye on it, because again, last week we got a hold up near this 1.0936. We're now kind of drifting back down. So to be honest, I'm kind of considering even actually a test of this 21-day EMA, but to get kind of more excited with the lower levels, a drop below the 1.0766 for me is required. So simple as that. For the upside, I'm waiting for a push above this 1.0936. So guys, that's it for this session. I do apologize for running a little bit over my time, guys, but I did wanted to cover a lot here, and I hope you found it useful. Once again, just to remind you that tomorrow will be my last Trader's Espresso in general, so please tune in. Again, we're just gonna look at the same stuff, or some new ones, some new stuff as well. If you want me to look at something, then please leave a comment after the video gets uploaded. And then I'll pick it up tomorrow. But yeah, guys, I hope you like this session. I hope you'll like this tomorrow's session, the last one, and then yeah, we'll and then of course you will be able to find me online later on, probably maybe after like a few weeks or a month or something like that. So I'm not disappearing from YouTube, but yeah, not with the Trader's Espresso anymore. So guys, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything, guys, really do. So thank you very much for that. If you want to catch me tomorrow morning, as always, at my Trader's Espresso, 7 o'clock GMT time. Thank you very much, and bye-bye.